Hey everybody, this is Rob of Archangel Inc. and we are back for Archangel Inc. Live number 21. This week, Jordan is not available. He is traveling with pretty intermittent internet access and just not able to be on the chat here tonight, but he may be monitoring the comments and participating a little bit. We shall see. But I am happy to be doing this here on my own. And tonight we're going to be talking about a subject that maybe people don't love dealing with. It is that time of year, though. And as business people, it is important, and that is tax preparation. So as an author, as a entrepreneur, as a business person, we have tax obligations, and we also have some insight, or we have some opportunities that the tax law affords us. And so I want to talk a little bit about that. So I want to, let's begin here. So introduction for taxes, or excuse me, introduction to taxes for authors. And I'm going to do my best to monitor the comments here and also participate on we'll do my best here to participate while I make these things available on screen. So there we go for both the Facebook audience and the YouTube audience out there. So introduction to taxes for authors. So my goal here is I want to keep it high level, meaning I'm not going to get very granular. I'm not going to answer very many questions. Well, we'll see. Maybe I can answer some questions, but I'm not going to get into specific tax situations for people or really dive into what qualifies as a deductible expense or anything like that. To give a little bit of background, let's see, there we go. I am not a tax expert. Consult your own professional if you need specific advice. I am not a tax lawyer. I am not a CPA. So definitely, if you have specific questions, if you have concerns or considerations, or you're trying to figure out what makes sense for your particular circumstance, then speak to somebody who is trained and qualified and all of that. But I am a small business owner, and I've had to do this for several years, and I want to help. So that's who I am. Small business owner who's had to learn and wants to help. So that's kind of the spirit of what's going on here. And we've got a few different things that we're going to talk about. So we'll kind of jump in. So one of the first things here, what is the goal of tax preparation? The goal, and there we go. Goal of tax preparation is to maximize your legally allowable deductions and reduce your taxable income. At least as far as I'm concerned, that is what we're trying to do here when we are looking at, and there we go. When we are looking at tax preparation, as a business owner, that's in general what you want to do. You want to be in compliance with the law, but you don't want to pay extra taxes if you don't have to. If there are deductions that are allowed, if there are things that you are permitted to reduce your tax liability, then by all means do that so that you can be in compliance with the law and as hopefully as successful as possible. The spirit of the law is you want to pay your fair share, but you want to also not be unduly burdened by, any additional taxes. Now, obviously taxes can be difficult and they might be burdensome anyway, but that's kind of in the best case scenario, what we're trying to do here, or what the tax authorities are trying to do here. So let's talk about big picture tracking, banking, best practices, what's going on, and there we go. So first thing that I would recommend, and this is when I first consulted my accountant several years ago. I started up Archangel Inc. and I was trying to, kind of get going and figure out, okay, what do I need to do to make sure I am, in compliance and I'm running a good business and I know what I'm doing. In the past, like probably most people out there, I had income that was from an employer, W-2 income. I've never had to file my own taxes and, withhold my own money for my tax liability. So all this was pretty new. So he had a couple of recommendations for me. The first was to consider obtaining an EIN. So what is an EIN? An EIN is an employer identification number, and you can do this online at the IRS website. If anybody's curious, I will try and pull a link to that. But if you just look up, apply for EIN on Google or wherever, then you should be able to find some information about that. And that is basically a tax ID number for your business entity. Now, in terms of what your business entity is going to be, there are a couple of things. If it's not just you, and if you're a U.S. resident, if you're a U.S. citizen, then you have a Social Security number, and that's basically your tax ID number. But if you are a business, you probably want your own, and you can set it up either as a DBA, which means doing business as, or as an LLC, which is a limited liability company. So a doing business as basically there is no additional legal structure to it, but it allows you to open up a bank account as a different business name. So for example, if you didn't want to deal with Rob Archangel, the author, or Rob Archangel as an individual, I have Archangel Inc. So you can write a check out to Archangel Inc. Or if you are a landscaper, and you don't want to go to John Smith, the landscaper, it can go to, JS Landscaping Industries, because that is a doing business as that you set up, and you can, register and you apply for that. That's what the EIN links up to. And you can open a bank account in that name. People can write checks to it. You can do business transactions under that DBA. So that's really helpful. If you, for whatever reason, don't want to set up a limited liability company, which is what we'll talk about in a moment, or if you simply don't, it's good if you don't want to set up a limited liability company, but it allows you really none of the legal protections that an LLC would allow. Basically, you're still fully liable for what you're doing, but it gives you a veneer of a different industry, different profession, and that might be advantageous. That might be something that you're looking to do. An LLC, however, is a limited liability company, which means that your liability is going to be limited. So if somebody sues Archangel Inc., Archangel Inc.'s assets are going to be different than my own personal assets. If somebody sues Microsoft, they are not going to get Bill Gates's personal assets. They're not going to be able to take his family heirlooms. If something happens, if Microsoft wronged them, they will only have access to the Microsoft company. And Microsoft is actually a corporation, but in this respect, it behaves the same way as a limited liability company. It limits your liability in case there are ramifications or consequences. Let's say you run that same landscaping business and there's an accident and your tire shoots out from your mower and it breaks somebody's window and there's all sorts of damages. The limited liability company will only allow you, or will only allow the other party to take the assets of that company and not of you personally. So it's a way to protect yourself, to insulate yourself. And it's advised if you are doing business, particularly on a professional level. So an LLC might be to your advantage. Look into that. There are different requirements state by state and county by county. There may be licenses that you need to file for and so forth. But again, this is why I'm not going to get too granular. We're not going to get too far into all of that, but it is a potentially good idea to set up an LLC. Anyway, so after you have your limited liability company or your DBA, which is associated with your tax ID, then it is a good idea to, let's put this up here, set up a business banking account. Something like a checking account and a savings account and potentially a credit card. This is what my accountant advised me. He said, okay, your checking account is going to be your operating expenses. Any money that you get in is going to go into that checking account. Month by month, any expenses that you use, you're going to use that credit card. That credit card will allow you, one, to track expenses so that you have them all in a unified place and it's a little bit simpler. But two, it will also allow you to receive potential fringe benefits, miles or points or cashback or that kind of thing, which I was advised at the time, and this may not still be the case. So again, consult your own tax professional. Those are considered are not considered taxable income. So if you get $20 cash back because you spent some money at such and such place with a credit card with your credit card, then that money is a bonus, is an ancillary component of doing business, and that's acceptable. So once you have all of that, again, he mentioned use your credit card, and we'll go down to pay for expenses. And you want to pay them in full each month as much as possible. Obviously, sometimes you might have to go over, but the goal is to only work with the operating capital that you have month by month. So, let's say you bring in $4,000 this month and you've got $2,000 in expenses and $2,000 is the leftover. The next step is going to be setting aside a portion of those proceeds after expenses in order to cover your tax liability. The shorthand recommendation that my accountant recommended to me was 25% of net proceeds. So again, let's say that same $4,000 gross income, $2,000 expenses, $2,000 net. So set aside 25% of that, about $500 of that $2,000 monthly income, set it over to your savings, and that is going to pay your estimated tax, your quarterly estimated tax, which is the next thing that we are going to talk about here. Quarterly estimated tax is, whoops, there we go. So set aside 25% of net proceeds, and the quarterly estimated taxes are how you avoid having a very large tax bill due on April 15th every year. So, it may vary depending on the type of business you run, but if you're setting aside that portion, every 3 months, send that money over to the IRS, and that will kind of keep you up to date and current. You may still end up owing, you may end up having a refund at the end of the year, but it's going to kind of just help you set aside that income and know, okay, that money I'm not going to touch. That's not actually my money. That's not actually the company's money. That is the liability that we have when we're dealing with taxes. So that's pay estimated quarterly tax. There we go. Okay, so all of that said, let's talk about tax preparation versus bookkeeping, because they are a little bit different. Tax preparation, and let's see. Tax preparation versus bookkeeping. And okay, so tax preparation is what we're doing for April 15th. Bookkeeping is what you should be doing on a continual basis, where you're sorting and tracking and trying to make sense of your income and your expenses. And you are, let's pull that up over here. Tax prep is what happens for April 15th. Bookkeeping is your continual tracking and sorting. Good bookkeeping means that you're going to have an easy time of tax prep at the end of the year. So, for example, let's say you have money going out. You spend money on office supplies, you have staples, you have pens, you have papers, you have your internet, you have your mortgage, you have, all these different things that potentially are expenses that you're using your business account to pay for. But there it is. Bookkeeping is your continual tracking and sorting. And yeah. So you have that bookkeeping at the end of the year. You want to have an easy way of saying, okay, how much did I spend in total on contract labor? How much did I spend in total, on advertising? How much did I spend in total on commissions and bank fees? All of these things. If you are bookkeeping ahead of time, if you're tracking all of these things, reasonably carefully, then at the end of the year, when you're filling out your Schedule C, which is the profit or loss from business form of your federal income taxes. Again, this is U.S. focused. Anybody who is outside of the U.S., I'm sorry, I'm not able to speak to whatever your particular tax situation might be. But when you're filling out that Schedule C, you have all of that profit and loss, and you have all of those categories filled out. So it's as simple as entering that amount and using that information for filing your taxes. We've got some questions. Self-publishing from Dale. Rob, what's up, dude? Jordan, what's up? Jordan, hey there. Self-publishing with Dale. What's up, man? Hope you are well. Jordan, thanks for popping in. Big fan of QuickBooks and trying to stay ahead of things and at least know what I'm supposed to pay. So yeah, great point, Jordan. Keeping good books and keeping track of your expenses is a good idea. We'll talk a little bit about QuickBooks and some other applications and tools that you can utilize down the road. Dale says, just so happens I'm uploading videos, saw Rob was live. Kind of missing you here. Okay, yeah. Jordan and Dale are chatting it up. Thanks, guys. I will keep on trucking when it comes to bookkeeping and all of that. So again, good bookkeeping makes for easier tax prep. And okay, so next up, we're going to talk about bookkeeping tools and applications. So as Jordan mentioned, QuickBooks is really good. So that's QuickBooks Self-Employed is the one that I would say is most valuable for authors, for small solopreneurs, entrepreneurs. It's really helpful. The thing that I really like about QuickBooks is it connects to your bank accounts, your credit cards, your PayPal, any sort of online accounts that you have. It will automatically link up with them and then allow you to, in real time or as it comes in, kind of categorize and sort them. So you can turn it into a little bit of a game. So yes, it connects to your bank, credit card, PayPal accounts, etc. And once you have that, it's like, oh, okay, that was a PayPal fee, that whatever percent that PayPal takes out, or okay, this money that was sent over to my marketing person, or sent over to one of my editors, to one of my designers, that's contract labor. And that is really helpful. Again, it gives you this handy dandy printout at the end of the year to show what you spent in each category, and also ascertain what your business expenses are like. So, okay, let's see a little bit more. Allows you to assign categories for sorting and for eventual tax preparation. In terms of sorting, the benefit there is to kind of just get a overall sense of what you're doing. What is happening with your business? Where are you spending your money? Is it fruitful? Do you have a decent return on investment on those particular categories? You might come to find out that you're spending a ton of money on meals and entertainment, and that's not actually bringing you clients. Maybe you're meeting with lots of clients, but you're not closing any of those sales, or prospects you're meeting with, but those sales aren't closing, and you might need to reduce that kind of budget. Or maybe you're spending a lot on advertising and you're not seeing the returns that you want to, so maybe you have to adjust that. Or maybe you're seeing really good returns. You're not spending a whole lot on advertising, but you could be spending more, and you could be bringing your business to the next level. So all of that is helpful. It's a good idea to see kind of what's going on with your business, as well as prepare yourself for taxes. Now there are also dedicated mileage trackers. So I found out about QuickBooks Self-Employed from I don't remember where it was. It might have been an advertisement, but I was looking up how to track mileage for business deductions. And I know that certain trips are deductible, but you do need to document them. One of the ways that you can document them is manually with a log, or you can also document them with an application. So something like QuickBooks Self-Employed. There are some others. Some of these are more geared toward like Uber and Lyft drivers, but they might be helpful in other circumstances. I can't vouch for any of these except for QuickBooks Self-Employed. That's the one that I use. But dedicated mileage trackers include TripLog, Everlance, Strood, Hurdler. So there are some other ones out there that might be beneficial. So feel free to check those out, and that can allow you to track your mileage for car and truck expenses later on in your tax preparation. So let's go over some common deductions for authors. So my first recommendation is to download the Schedule C. I mentioned that if you just Google Schedule C, you'll find it. It'll come right up, and that is the business profit and loss document form on your tax return, and that gives you a sense of the different things that the IRS sees as ordinary and common expenses. So it includes things again like advertising, office expenses, what else? Commissions and fees, licenses, all these different things. Not all of them will apply to you. Not all of them will apply to every individual. Some of them may very commonly not apply to authors, which is the audience that we're talking to here. But just get familiar kind of with the Schedule C and see what it's like. But that is going to be a good first step for getting your getting your taxes prepared and figuring out what sort of deductions you might be eligible for. So moving on, we have home office. Now, the home office is a pretty common one. Some people may have taken advantage of this already. The key thing to remember here is it is the percentage of your home you regularly and exclusively use for business. So you can't deduct your entire mortgage. You can't deduct your entire rent payment. You can't have your guest room that, occasionally every so often you'll write a couple of notes down when you're brainstorming new book ideas. It has to be an area that you regularly and exclusively use for business. And typically that's calculated as a percentage of the total square footage of your home. So let's say you have a home that is 1,000 square feet and you have a spare room, which you turn into your office, and that is a 10 by 10 room. So that 100 square feet of your total 1,000 square feet is 10% of your home. So you can't, let's say, again, just using round numbers, you spend $1,000 a month in rent and you cannot deduct all of that $1,000. But if 10% is your home office, then that $100 might be deductible as part of your home office deduction. So that is a really helpful tool, especially for people who don't end up, having their own dedicated workspace. A lot of authors, do this kind of thing. They work from home. Maybe they do co-working spaces. They do other things like that. Actually, now that we're talking about co-working spaces, that would potentially qualify as rent. Other business rent. If you are routinely purchasing or access to a space that maybe has Wi-Fi, that maybe has offices and cubicles and telephone access, or whatever it is, a co-working space. If you're familiar with them, they're very popular and becoming more common in different parts of the country and different parts of the world. So that expense is potentially a rent deduction, because you are renting that space so you can do your business. Okay, moving on. Advertising. So this is a very big one. It's pretty broad and pretty common. So you can think, obviously, marketing payments directly to places like Amazon Marketing Services, to Facebook ads, those kinds of things. But it might also include other things that are that you may not initially think of as advertising. So, for example, if you have a website by which you interact with the world, that is part of your advertising budget. That's potentially a way for people to learn about you, and that would qualify in most cases. Again, talk to your tax professional, but something like that is advertising for you. Any design work that you're doing. Let's say you are getting cover design work being done to help you sell more book covers. That's advertising. That's part of your marketing effort. That's part of your marketing strategy. This falls under advertising. When you are thinking about advertising, think really broadly. Okay, what am I doing that's helping me build and enhance my business and grow it and take it to the next level? All the things that are kind of public facing, those are potentially advertising expenses. So look into those kinds of things as a way to reduce your tax liability, as a way to build upon your advertising strategy. So moving on, commission and fees. So bank fees, credit card fees, most particularly PayPal fees. A lot of us utilize PayPal pretty commonly, and PayPal takes their 30 cents plus, roughly 2.9%, depending on the credit card, per transaction. So all of that money at the end of the year, maybe they've collected a couple hundred or a couple $1,000s from you, depending on the volume of business that you're doing. Those are deductible expenses. That's not money that's just lost, but those are, commissions and fees being paid out for you to utilize your business to go about the normal course of business. Another one that is important, and that is contract labor. So let's see. Contract labor is anyone that you commission to help. And you want to make sure, especially if they are based in the US and you are paying them particularly, cash, certainly cash or check, but any form of payment, really, it's advised. Make sure that you fill out a 1099. Have them fill out their W-9, get their tax information, and fill out a 1099 at the end of the year, which basically is a form that says to the government, hey, in the course of doing business, I paid this amount to, outside help That money that looks like is there as part of my gross income isn't really mine. It actually has been dispersed to these other people, and these other parties are responsible for their portion of their own tax liability. So contract labor, in the normal course of business, if you're an author, if you have somebody like Archangel Inc. doing work for you, or if you have a freelancer or somebody who does web work or web design, web design or advertising or any of these different things, potentially that is contract labor. If you're going to be paying them, again, especially if you are paying them with cash or check or some other non-electronic means, definitely make sure to track all of that. I have been told that when you have high contract labor costs, that and especially when you do not file these 1099 forms, that is a potential fraud risk and leaves you more liable to potentially getting audited. So if you don't want to get audited, which is probably not a very fun thing, I don't want that to happen to me. I don't advise anybody to have that happen to them either. Then make sure that you're in compliance. But contract labor is anybody that you commission to help in the course of your business. So that is another common deduction. Another thing that we can talk about is depreciating assets. Now, these are larger purchases typically for the business that cannot typically be deducted in 1 year. But things like furniture, if you're building out your office, if you have desks, chairs, client meetings, meeting space that you're building out for when you interact with clients, these are typically, not smaller expenses. They are things that are intended to last for a while, and they're going to depreciate. And you can take a deduction. In some cases, you can take that deduction, all of it in the first year. Other times, it's going to be over a span of 5 years or 7 years, or in some cases longer than that, 10, 20, 30 years. I am certainly not an expert in depreciating assets. So if you are doing this, if you are considering purchasing something big for your company, definitely talk to a qualified tax professional to get all of that attended to. But that is definitely something that is a deductible expense if you are purchasing it. So next, legal and professional services. So did you consult a lawyer? Did you go on even on somewhere like Elance and get somebody, a lawyer, to help you draft up a contract so that you can have a working template when you're interacting with clients? That's a legal service. God forbid if you have somebody who sues you, there's some contestation about rights holding or something. Do you have legal help? Those sorts of legal fees are deductible expenses. They're a part or a consequence of doing business. They're a part of doing business, part of keeping you in business, and that is an expense that is deductible. Professional services, again, accountants. You go to somebody for tax preparation. You go to somebody to help keep your books. You do these kinds of things. This is a normal and ordinary business expense. This is typically a deduction that you are eligible to take. And as an author, you may end up taking advantage of this. So another thing that we can talk about, office expenses. So office expenses include, things like postage, envelopes, pens, paper clips, Post-it notes, anything like that. Those sorts of things. When you're jotting information down and using that, they're considered tools that you will go through over the course of operating your business. They're not necessarily, like a new laptop that's supposed to last you for 5 years. Your Post-it notes aren't necessarily supposed to last you that long. So these are normal office expenses. Office expenses are typically deductible as well. So another one that we can look at from the Schedule C is rent. Now, I mentioned before, dedicated office space. Let's say you rent out a space to meet with clients. Maybe it's a co-working space. Maybe it's just a part-time space. Maybe it's a full-time space. If you're at that level of business where you actually are renting out a space that is exclusively used for business, then that is no longer a home office deduction subject to the percentage, but it's 100%. So whatever that cost is, that is a deductible expense, dedicated office or co-working space, otherwise the home office deduction. Yep. So we talked about the home office deduction earlier. So another thing that you might be looking at, taxes and licenses are typically deductible. And let's pull that up here on the screen. So in some places, you are subject to sales tax. Some places you are subject to, depending on the nature of your business, or you are subject to licensing fees. To set up your LLC in Florida, in the place where I reside, there's an annual fee. In some cases, there are local fees as well to maintain your business in good standing. So those are a part of doing business, and those are deductible fees as well. Any sales tax paid, local or state business licenses. So those are, the way sales tax works technically is you're not charging it, you're collecting it. So somebody makes a sale and the state says, okay, whatever that sales price is that you parties agreed on, it's going to be, X percentage on top of that. And then you hold on to that as the provider, and you send that off to us, on typically a monthly basis, sometimes a quarterly basis, but you're just collecting it and dispensing it to the state agency. But it may look like that's part of your gross income, but it's not. So that is a deductible expense in that case. Another thing, travel and meals. So for example, let's say you are going to an author conference. Let's say you're going to a conference related to whatever particular field that you are working in. Let's say you're going to see somebody speak, or you're being invited to speak, or who knows what you might be doing. Those sorts of travel for the purposes of research or advertisement or business development are potentially deductible. Also, meals with clients. Maybe you're meeting up with somebody, meals with an agent. Maybe you're interviewing and you've been a self-publisher for a while, and you might be meeting up with an agent. Typically, the agent would be paying for that, but maybe not. If you have somebody out and you're trying to convince them, let's say, to be your agent, and you say, hey, let me take you out to dinner, let me take you out to coffee, that is potentially a deductible expense as well. Meals and entertainment are typically going to be deductible at a reduced rate, usually 50%. So look into that a little bit further. So you can't just go out to the fanciest restaurant in town and say, all right, this is on the dime of my business, and I'm going to fully deduct, the fanciest meal that I can get. You may still be able to go to that fancy restaurant, but it's not going to be 100% deductible. So let's see. Business use of vehicle is the last one that I want to talk about as a common deduction for authors. And again, this is where mileage tracking comes in. So you must track mileage. The Schedule C says, did you document it? Do you have evidence? Do you have proof? And as far as they're concerned, proof is either an application, something like QuickBooks Self-Employed, which offers that, or some of those other dedicated mileage trackers, or logging your odometer. You actually have to, you can't just say, okay, I'm going to plug this into Google Maps. It was 30 miles round trip, so I'm going to take off 30 miles. Technically, if you're ever audited and you do not have evidence that says, yes, I started off at mile marker 7,512 and I ended at mile marker 7,542, then this can be struck down, and your liability for that additional money that you had previously deducted might remain. So something to keep in mind. A couple of questions here. Going back. All right. So self-publishing deal, blah, blah, blah. Okay. You can even pay taxes. Jordan says, you can even pay taxes through QuickBooks too, once you go through a little setup process. They help make things easier. Yes. So that is an option as well. Jordan says, fun fact, TurboTax, QuickBooks, and Mint Budgeting are all linked. Yes, I believe it's Intuit is the parent company. And they do try and make it really helpful. They have a number of different things. Mint is a budgeting tool, as Jordan mentioned here. So that is a cool tool and might help, just for your own personal finances, having nothing to do with tax preparation or maintaining your business. Dale says, I document manually, and Kelly does all the data entry at the end of the year. So yeah, you have to find a system that works for you. I also documented manually for the first couple of years of business. I didn't start using QuickBooks Self-Employed until a couple of years ago, and I really like it. It's ended up being very helpful for me, but manual tracking can be good. It doesn't matter what method you use, as long as it is documented and it works for you, and you're able to do it consistently, and you're able to do it in a way that makes things easier and smoother and more reliable. So And that's mileage, that is. So yeah, definitely. If you're doing other things too, potentially some people really like tracking all those things. They have the metaphorical or sometimes literal shoebox full of receipts, and they have them annotated like, okay, this is travel and entertainment, or this is mileage, or this is advertising. Some people, it works really well. So whatever it is fine. It doesn't matter. I'm totally agnostic about all of these practices, as long as it helps you to do this in a way that is less stressful. That's kind of my goal from here. So Jordan says, Archangel Link, is it true that the home office deduction is something IRS will do audits for? I saw someone say this the other day and didn't buy it. The IRS can and will audit for anything. I have heard stories of people who ran afoul of the IRS, and they audited back to the beginning of the business, 3 decades prior. They say that it's a good idea to keep records for 5 to 7 years, but they can go back to the beginning of your business. They can go back to the beginning of your life. As far as they're concerned, you're also a tax ID number. If you have a social security number, and you're in the United States, they can go back, and if they have evidence that you've committed tax fraud, or they believe that you have, then it's going to be up to you potentially to do that. Now, they don't necessarily want to, and the IRS isn't in most cases out to get the typical person. But if you do something, if you provide them some reason to believe that you've been behaving fraudulently, potentially you can. Now, onto your specific question, Jordan, when it comes to the home office deduction, that is a pretty common one, but it's usually, from what I've heard, from what I read, from what I understand, it's usually because people are trying to do things that are pretty outlandish. They're not doing that. Okay, percentage of home use. It's not reasonable. Something in the 5 to 15 or 20% range seems plausible as a home office. But if you're trying to deduct the full cost of your mortgage, let's say, when you're running a very small business, and it's 100% or more than 100% of your total business proceeds, then obviously this isn't part of the business. There's something else that's financing it, and it's potentially something that you are going to get flagged for. So again, this goes back to what I started in the beginning. Make sure all of your things are, all of your expenses are legitimate, and that they are traceable, that you're able to justify them, that you're keeping good records, and that if, God forbid, you ever did have an audit, you're able to say to the IRS agent who comes to investigate, hey, yep, here's all my information. Literally, I've heard stories of people who the IRS agent will come in with a tape measure, into their home office space, and will measure out, okay, yeah, that looks like 9.5 by 8.5, and you have it listed as 10 by 10. So it behooves you to be honest, and it's probably not going to happen in most cases. But the whole tax system is really based on more or less voluntary compliance, and there's an assumed honesty to it, and you're expected to do that. So again, it's that rare case when somebody is actually audited. But if you're doing something that's obviously fraudulent or obviously unlikely, you increase your risk of running an audit. So a home office deduction can be perhaps more easily misused, and that might be why it's more commonly flagged for auditing. But by itself, it's not going to get you audited. I've used the home office deduction the several years that I've been in business, for as long as I have been, and I've made it sure that it's totally legit and correct. And knock on wood, I have not been flagged yet. So yeah, do more frequent edits for Age Cool Audiobooks. Thanks for checking in. Great program. I am happy to share those tips. You are very welcome. And Jordan, really helpful hearing the expense breakdown. That's awesome. Very glad to do that. Education. Yeah. So Dale points out, any conferences, seminars, workshops that I attend, I claim as a deduction. Absolutely. They are part of your business. They're part of growing your business and becoming a better provider of whatever it is that you're doing. So those are deductible expenses. Jordan says, self-publishing with Dale, great point. Include courses, books, or other education for reasons of business development, correct? Yeah, absolutely. If you are cool. Right. And Dale says, anytime it's unclear, I can get in touch with their CPA. That is the exact correct advice. But yes, in general, something like, if you're using it for education and growth within your arena, within your business, then that is potentially deductible. So make sure you do that. Smart. Jordan says definitely going to your CPA. Okay. Let's see. Okay. It's kind of a good push for what we're doing tax wise. I'm not. Oh, audits. Yes. Audits aren't fun. So, I've heard probably a lot of people know by now when it comes to the IRS, they don't call you. If you get one of those calls, is like, hello, your social security number is in danger of being, stopped right now. Please call immediately and contact us. That is not true. The IRS does not contact. They send letters, and if they'll send more letters. And then if they do not get a response, or if they do not have the issue resolved, then they send somebody with a briefcase, knocking on your door. But they're not going to call you. They're not going to email you. Audits technically, I suppose I have been audited in the sense that an audit, I believe, is only when you receive a notification from the IRS, again, via a letter. So I've been notified before when, for example, people who I issue 1099s to, they change their address, and they'll say something like, if this was a mistranscription on your part, or if you have already updated the information, feel free to disregard this. If not, contact us. And they have other steps involved. Auditing, you want to be in compliance. That is the key. Make sure you're doing things by the book. Don't subject yourself. Running a small business is hard, and don't subject yourself to the unnecessary stress of trying to kind of cut corners and fudge things when you are when you're potentially going to expose yourself to a very significant additional stressor. So, okay. And yes, so cool. All right. So anyway, let's move on. Final closing thoughts. Thank you everybody for being here, for participating. I'm glad to share a little bit of, tax prep that I've learned as a business person, as a small business owner, as an author, as a solopreneur, as all of these things that hopefully some of the people in the audience here are in that same group. So closing thoughts. There we are. And okay. Again, I kind of went over this when I was making my impassioned plea a moment ago, but ensure that your deductions are legitimate and documented in case of audit. What you want is, if in the unfortunate event that you are audited, the IRS comes and they send their tax person over with their briefcase and says, all right, show me all your books. I want to see what you're up to. You want to be able to say, yep, no problem. Here it is. You have your statements ready. You have all of that information ready. One of the nice things, again, with QuickBooks Self-Employed, and why I like it, it links up to my various credit card accounts, PayPal accounts, and so forth. So I can say, yeah, I got paid from such and such person on this date, and you can see it shows up on my income ledger here. I paid, such and such other person on this date. It shows up on my contract labor ledger there. And yeah, here's my purchase. This is office supplies purchased from Amazon, and it was purchased on this date, and here's the credit card transaction. And then you can go and look at the Amazon account. I just want to make sure everything is totally legit. And obviously it's a little bit of an additional step, but it actually becomes pretty easy once you get it set up. And it automatically syncs all of that up. So there's not a lot of paperwork floating about. It's something that if I ever had to go and justify, like, oh, what was that home office expense that you purchased on July 15th of 2018? I can pretty easily pull that up and say, oh yeah, here it was. This was 2 packs of pens and some highlighters, or whatever it may be. Another thing to keep in mind for closing thoughts: if you show and claim business losses for 3 of 5 years, it may cause the IRS to reclassify your business as a hobby, which means that you can no longer claim profit and loss from it. So one story that I heard was some folks who would take these really extravagant vacations. They'd go scuba diving and do underwater photography in Hawaii or the Bahamas, or whatever tropical location struck their fancy. And they would sell that photography as like mouse pads and mugs and that kind of thing. And they would spend maybe $5,000 or $10,000, try and deduct this as a business expense, and maybe they'd get a couple $100s in income. And now, maybe they were trying to run it as a business, but as far as the IRS was concerned, this became just a hobby, and they could no longer deduct that difference of whatever it was that they were making versus what they were spending on this. So some people use this business, profit and loss as a way to kind of get around, try spending their own money, spending their post tax money on things that they want to do anyway, and that's not the spirit of it. And if you operate at a loss in 3 of 5 years, again, you are potentially going to be reclassified as a hobby. After which point you cannot maintain that business any longer as a business that allows for deductions. The government assumes that if you're running a business, that you're doing it to make money. That's the idea of business and not a hobby. So just be careful, when you're claiming all of your deductions, make sure that you are not doing something that is actually not working as a business, and expecting that you're going to see the tax benefits afforded to small business people as a result. Another thing here: take advantage of the spirit of the law. These deductions are in place to provide a holistic account of your business so you can grow without undue burden. And, the specifics of what constitutes undue, we can debate about, but that's kind of the idea. We have undue burden if we are paying taxes. Let's say, for example, you're paying taxes on gross income that was collected for sales tax. So you're being double taxed. You don't want to do that. That's why you're allowed to deduct it. You already gave the government that money. That wasn't actually your money. So you shouldn't have to pay taxes on it as if it were your money. So yeah, take advantage of the spirit of the law. These deductions are here, use them and use them honestly and sincerely, but don't be afraid to use them. You run a business, and there are a number of benefits that are afforded to business people. So again, final closing thought: I am not a CPA. I am not a tax lawyer, but I will try to help if you have questions. So I'm a small business person. I've been doing this for a couple of years. I found some practices and ideas and things that work for me. So if you have questions, now or later on down the road, I will keep an eye out for them. I will try and point you in some helpful directions. And I think that's it. Do we have any final thoughts? Let's see some more comments here. Dale says, I was audited back when I was a personal trainer around 2008. I received a letter. It sucked at first, but thankfully it was relatively easy to submit the paperwork. Yeah, exactly. Technically, auditing, we think of the army of tax professionals or IRS agents coming in and, raiding all of your file cabinets. That happens sometimes, but in most cases, audit is just, hey, there's something interesting going on here, or something we don't quite understand. We need more information, or we want to get clarification or issue a correction or whatever. So good point, Dale. Jordan says, thanks for sharing. Sorry to deal with that, but glad it wasn't too bad. I agree. Jordan, it was mentally stressful. It came to find it was all for nothing because I wasn't hiding anything, and he was diligent with his taxes. Exactly, Dale. Good work. That's not to say that innocent people don't sometimes accidentally get caught up in the crossfire, but if you're doing everything you can, if you're doing your due diligence, then this sort of operation, tax preparation and your tax liability and all that really isn't something to fear. And with the benefits afforded by having deductions and things that you can count against your business profit, it can help you to grow and be a better business person, and to take that next step so that your tax liability is reduced and your legal liability is reduced, while still being in compliance and growing your business, and hopefully becoming really good at whatever it is that you're doing, authorship or otherwise. Just be diligent, make sure your deductions are legitimate, and you do due diligence, and get help if needed. Yes, get help. There are lots of resources online. You can actually go ahead and read the IRS tax code. Probably nobody actually reads all of it and knows all of it. Somebody who says that they know all the relevant tax law is probably lying. So a good tax professional, a good CPA or whomever, will either have experience in your field or have access to resources and communities, paid subscription services, that kind of thing, with experts who are familiar with those particular situations that you might be facing. So great stream. Yes, thank you, Dale. Thanks for stopping in. Glad to be here. Jordan says thanks. Yeah. Okay, great. So Jordan, hopefully will be back with us next week. But thank you everybody for tuning in. I am glad to chat a little bit, and I hope this has been helpful. If you have thoughts, comments, questions, leave them down below. As always, we love your likes, your subscribes, all of that good stuff. And thanks for tuning in, everybody. Have a great rest of your night.